start broadcasting, and we will be live any moment. This is probably recording still, by the way. That's good, just a little intro. Now we're live. Hey guys and girls, welcome to this week's Tuesday Night Live. I've got another friend here today. We've got Wayne Murray from our investor relations team.
Evening.
A lot of you guys may not know Wayne. You may be working with Wayne. You may be a part of your investment journey, and we'll get into a bit about Wayne shortly. Tonight we're going to talk about sort of the traits of investors, the journeys, some of the we've got Wayne. He's dealing with clients every day that are getting like 5, 10, 15 properties, 20 properties in their portfolio. We want to run through what he's experienced with people over the last couple of years. But I guess to start off, Wayne, tell us a bit about yourself, who you are,
Cool.
what you do. And,
Awesome. So I'm part of the investor relations team. Probably the best looking person there. No, actually, a couple of ladies have joined up, so they take the reign. I've been part of the team for about 18 months.
Yeah.
Prior to that, I've been in trading.
Yeah.
Online trading and education purposes and different sales roles and customer service roles.
Cool.
Over the last few years. So, yeah.
Now, all I know is that when I'm dealing with one of your investors, like, they just love you. So, no one ever has anything bad to say. Everyone just loves you. Everyone's like, Wayne's helping me out and he's doing a great job and all that sort of stuff. So,
Aim to please.
the love, the care, and the eye for details there. I was just chatting to Ryan just beforehand, and he's one of our investors, and he said to us that that the thing that he loves about using is, he goes, I was really worried before I started using B.Invested, because I was like, are these guys going to be able to do what they say they're going to do? Are they, is it real? Can you buy 10 properties? Can you buy 20 properties? I think it's up to like 5 or 6 now. And he said, the thing that I actually like dealing with you guys for is the fact that I can talk to you whenever, because he's over in Perth, his time zone's different. He works shift work, he's in a mine, all that sort of stuff. And from him, he likes the fact that you'll respond to him if it's 10 o'clock at night, and I'll text him at 2 o'clock in the morning when he's texting me or whatever, and we're always there. So yeah, thanks a lot, Wayne.
Yeah, cool.
I guess some of the things that we'll be talking today with Wayne is a few of his investors and their portfolios and their position, some of the the numbers of what the background looks like. A lot of people say, how can you build a large property portfolio in 2022, in 2021 and 2020? We'll be able to do it in the future. We've got a few different scenarios here that we'll run past and get some background on those journeys. But as always, I'm going to keep it really short today with all my news articles. I can see there's a few of you hopping online now. It's really slow tonight, Wayne. Like, normally there's like 150 people on, but maybe we'll put something wrong in our wording.
It's not cold enough outside to be inside watching.
Maybe not. I don't know. But starting on that, it's actually a funny thing, right? We talk about what's happening every week in the news and people going bankrupt and all those sort of things, or companies going bankrupt. And we've talked a lot about gas, coal, and the ability to generate electricity now. I live in Sydney, but I sort of live off-grid existence, right? I don't have I've got power to my house, but I don't have water, I don't have sewer, and I don't have gas. I have to have all those services provided and brought in. And this afternoon I had something that was cooking, and then the gas went out, and I was like, shit, okay, I better call up the gas company. And when I called the gas company up, they were like, hang on a second, Nathan, we can't get gas to you. There's an emergency thing. You pay like $80 or something, you get it there within 12 hours. And they couldn't deliver gas for 4 weeks, right?
Wow.
And I was like, how do you have a shower? How do you cook food? How do you, do whatever? And they said, well, just go to Bunnings and buy a barbecue bottle, right? And fortunate enough for me, tomorrow I'm moving to my dream house, and I'm just moving down the road to another property of mine. But it's funny that you can't even get gas delivered to you. So we're living in a really strange time. And on strange times, I've got 3 articles to share with everyone today. So the first one is an AFR article, which I had actually just been sent to me, and it backs up something that I had shared to Birchfeed subscribers just the other day. And this article is just from AFR, and it reads, Government Debt Agency braces for market stress. Right? And the head of federal government's debt agency says it's preparing for a move to a more volatile world with rising inflation and an unwinding of central bank bond buying that could reduce the appeal of Australian bonds and push up borrowing costs. Rob Nichol, the Chief Executive Officer of the Australian Office of Financial Management, AOFM, said demand for Australian bonds was solid, but there were risks on the horizon as the AOFM prepared to sell a further $125 billion of debt to domestic and international investors at materially higher interest rates than in 2021. We can't ignore the possibility that with an outlook for continuing material adjustments across financial markets, further periods of heightened volatility and market stress are likely to emerge. He told The Economist at lunch in Sydney on Tuesday the comments come after the biggest sell-offs ever experienced in the bond market of Australian 10-year rates have quadrupled from 1% to 4%, materially increasing borrowing costs for the cost of new debt. The government's debt bill could rise by $20 billion over 4 years as gross borrowings rise above $1 trillion, based on the back of an envelope analysis of the Treasury's pre-election economic and fiscal outlook. However, rising inflation will deliver a higher nominal revenue to the budget through rising company and personal taxes, so the net effect is not clear. Let's just break that a little bit down. So the cost of debt has now quadrupled from 1% to 4%. If rates go up from 1% to 4%, that's a 400% increase on the cost. The government now is going to be copped with all these expenses. Now they're saying, oh, the budget, we've done a back of the envelope, everything's looking good, whatever. We are going to be able to derive higher revenue through rising company and personal taxes. So if our taxes go up, that's cool, they get more money. But the problem is now we're entering in a recession, right? You go to every shop and they don't have stock, they don't have the ability to get access to stock. Taxes, how high are they going to go up, right? The government's now going to end into a position, if we go into a deflationary cycle, we'll see less revenue coming in via taxes, we'll see less transactions happening out there in the system, and we're going to see higher increased rates. That's going to be a recipe for disaster. Most people are sitting there worrying, oh, my interest rates might go up from 2.5% to 3% or 4%. Like, you've seen me send out probably 2,000, 3,000 properties to investors over the time that we've been working together. The interest rate inside the cash flow sheet for everyone is 4%. It's already. So I've already factored in for a 1% increase on a normal sort of rate. But, if you're looking at most businesses or the government, the debt level is increasing at a much greater rate. And that's where we're going to see the need or the pressure for those rates and the bonds to start collapsing and to come down to a more realistic level. Let's go and look at this country around the world, the US. Wall Street Journal, US paying more to borrow as Fed raises rates, inflation stays elevated. This one's really fun. Interest costs on national debt are up 30% this fiscal year and could increase more. This is on the 25th of June. Some budget analysts say that the increase in the federal government's borrowing costs could potentially crowd out spending for other priorities and add to the overall US debt held by the public, which is projected to reach its highest ever levels as a share of the economy over the next decade, according to estimates from the non-partisan Congressional Budget Office. Who gives a fuck who they are? Some other commie agency. Rising interest costs simply grow our debt and increase the burden on the next generation, forcing them to pay more for our past than for our future. There's a fun part in here. Government spending on net interest costs in the fiscal year that began last October totaled about $311 billion through May. So the interest for that year in the US, so just on their $30 trillion worth of debt, the interest bill at 1% was $311 billion. So let's just think about that. If the rate was 1%, the government's now paying $311 billion on 30 trillion. that's 1%. If the rate was to go up from 1% to 4%, like it is everywhere in the world, we would now see that figure on 30 trillion go up from 300 billion to 1.2 trillion. 1.2 trillion, like it wasn't only like less than the turn of the millennium, right? It's only 20 years ago that there was less than $1 trillion worth of debt ever created, right? And now they're paying $1 trillion a year with no interest on that. So when we have the cost of the government, this is what we've been saying for a very long time, you put the cost up, the economy is not that strong as it is, and we're going to start seeing massive issues. The most interesting part, longer term treasury yields have also advanced, with the 10-year rising to around 3% from roughly 1.5%. There is a really cool part here, which is fun. Here we go. The US has about $30 trillion in public total debt outstanding. As of late March, about 29% of the outstanding marketable treasury securities were set to mature in 1 year or less, right? That debt, when refinanced, would be most affected by increases in interest rates over the short term. So it's pretty clear, like we were talking about this well before this article on the 25th of June, which came out, that said 29%, so that's 29% of 30 would be about 8 trillion, just quick numbers in the back of my head, that would be looking at, that would be rolling over in the next year. So the cost of that funding, that's going to go up massively. So at that point, what's going to happen to interest rates? What people ask that question. Anyway, we go and look at this next article, which is my third and final one for today before we get underway. This one here is from, I forget which article, I think it's from The Guardian. It's from The Guardian, and it reads, UK mortgage lenders told, oops, we don't want to do that, bump the end button. UK mortgage lenders told they can scrap affordability rules for buyers. Bank of England feels other measures will play stronger role in guarding against household debt. Lenders will no longer have to check whether homeowners could afford mortgage repayments at high interest rates after the Bank of England originally designed to avoid another 2007 style credit crunch. So you want to see how this Ponzi scheme can keep growing? It's just manipulate the debt more. So in the UK, what they're doing is they're removing basically what APRA had set out. And it says here, the rule was introduced in 2014 and was intended to make sure borrowers did not take on more debt than they could afford, and potentially any downturn and put financial stability at risk. So all of the things that were done from APRA, basically, it's funny because APRA here tightened a lot of things in 2016. It fucked the market. Like, it actually caused like a recession to happen beforehand. Not only did it happen in Australia, but these news that has been occurring, everyone thinks, oh, house prices in Sydney are rising, house prices in Melbourne are going up. It's got nothing to do with Sydney or that you're the best investor in the world or whatever the case may be. It's got to do with monetary policy. And the more that they manipulate that, the easier it becomes for cheap available credit, the more flow that there is out there for people to buy. So looking at this, they've just flat out come out and said, we're going to scrap all the protection to keep the markets intact. So let's just play out devil's advocate here. We have rising interest rates, which is causing to remove all the bank policies, means easier access to credit. And then we're going to see all this debt roll over. 29% of the debt is going to roll over this year. It's going to push the rates up for all the government debt, for business debt. Everyone's debt is going to get refinanced at a much higher price, meaning that there's going to be a need to reduce the debt. So when you've removed all the protection, dropping all the rates, that's going to put rocket fuel to blow up the markets. So, the opportunity, I believe, that we see right now is taking advantage while people are scared. These articles, like, I use this sort of data to be able to get the deals down as cheap as we can, and get as much off as we can while we're buying the property. So it's a very exciting time. This market might last 6 months, might last 12 months, might last 24 months. But I can't see interest rates going up and staying up any longer than 12 to 24 months. So, yeah, that's the exciting news out there. But on that note, I can see a lot of people commenting here. We might just go and see who's who's commenting here. There's a few of your fans here. We've got here Jeremy. Hey mate, still waiting for my farm tour. Left me hanging. Hope you doing well, Jeremy. Hey Nathan and Wayne. Hey Robbie. One good session from you, Letty. He always writes entertaining comments here. Bill, love you, champ. You're a piece of gold. Thank you, Bill. Appreciate you watching. Internet, Wayno, you've made it. You're famous now. Phil.
I don't want to be.
Pat, there you go, Patsy.
Oh, Patsy.
Looking good. You're saying you're looking good. If you're liking Wayne,
thanks for doing my hair, Pat.
Give a like to the video, share it to your friends and family. That's the best thing you can do to keep Wayne famous here tonight. So smash up the likes, everyone. So I guess now we've got a few. I actually don't know who these people are. I just see numbers here, and I feel like I'm reading in Braille all the time, right? I can see numbers. I can sort of have a bit of an understanding of who these people are, because I'm working close with them, getting them the properties. You're working close with them, making sure that everything's on track. But I guess some of the questions that we've got, maybe if we run through the first scenario, which is one of our investors from this year, started with 160k of capital. These things here, like there's different. I can tell that there's different people with different starting points and different income positions here, but someone might say, I don't have 100 grand to spend, right? But the first thing that comes to mind, I was chatting to someone doing a map session on the way here, and they were able to pull out 100 grand worth of equity from their property. We're going to buy 2, maybe 3 properties straight away using equity. So it doesn't mean that you need to have the cash sitting there ready to go. It could just be equity in your property that you've already got. You might have bought a property 2 years ago, 5 years ago, whatever.
Yeah.
But we've got a couple here that started with 160k capital. We've got 4 properties. Talk to me about.
Yeah, they live in Sydney. Probably a bit short in terms of getting into the market. So they thought in Sydney for a principal place. So they thought going down the investor path was the best option for them. So they've been with us 6-8 months now.
Yep.
And they're up to 4 properties.
4 properties, 8 months. I think they're buying the 5th one, maybe.
5th one. Yeah.
I think they might be buying
the 5th one.
Yeah. So we've got here. We've got here, one of the properties was like a really weird one here, and I know which one it was. It was in Western Australia. It was 113 grand, right? People think you can't buy a property for 113 grand, but they bought it for 113. It rents for 11.5 grand a year, so it's like 220 bucks a week or something. What did it revalue at?
200.
200. How much equity did they pull out?
About 64, 65 grand.
64k. So that equity that they were able to pull out, so if someone just had 20k, right, I guess they could get into that one deal only. And with that one deal with 113 grand purchase, revalue at 200, pull out at 64, that could get them into another 1 or 2 properties thereafter.
For sure.
So I guess we could take this investor's sort of snapshot. It's great that they had 160. It's great that they got up to 4 or 5 properties, but just that, like, each deal has to serve a purpose, I guess. So.
And their main aim is to eventually have enough equity there to buy their own property. So it's just a matter of building it up.
Cool. And I see here that they've got a Queensland property. We've got the New South Wales property, 375 rent, with a 5% sort of yield there. They've got the one that's in Western Australia for 113 grand. They've got a new one. That's the one that's the bulk deal that we just did. Is that right?
That's still going through. So,
yeah, 295. That one for 295. There's one in the block next door for 350. So 55k equity in that one sort of straight away. Total assets 1.14 mil. With an income of 62k a year. There's some blue chip assets there, some cash flow assets, and whatnot.
Good mixture.
Yeah. So I guess maybe if we look at a few aspects of that client, like they want to buy, they couldn't afford. Maybe you give me a bit of background.
I think they want to buy in Sydney eventually.
Yeah. Why didn't they buy
they're still
Sydney
currently renting. As a principal place.
Yeah. Why didn't they?
It's just too expensive.
Too expensive. Yeah.
So
what's the property portfolio going to do?
It's just going to help them get the cash flow,
Yeah,
but also grow. They're getting a mix of
yeah,
equity
cash flow.
and cash flow. So
Yeah, cool.
yeah,
I know that client actually. I remember where I was. I was at my holiday house, walking along the beach, talking to them for the first time,
yeah.
and I know who that is. And
They may be online. I can't see. I'm blind as a
but
bat. Yeah,
there you go. You got someone there saying that Wayne's the man. One of your
there
one of your
you
friends.
go.
Cool. I'll keep the questions coming through for us, and we'll get to the questions a little bit later. Um, so they're I guess using the capital that they had, buying a property for 160K capital to start off with in
Mhm,
Sydney at a 20% loan. That'll just be like a 20% deposit for an 800 grand property.
mhm.
You know, people will get stuck and they go, I can't buy anything. You buy, a house in Mount Druitt for that price.
Yeah,
Here we are with 4 or 5 properties, a nice cash flow stream. Um, yeah,
I'm pretty sure they've got enough money to do super too. Just
okay.
haven't got there yet. So
They haven't got there yet,
yeah,
yeah. So that's only they started in December. We're in June, 6 months, 4 properties. And they're pretty conservative too.
they are. Yeah,
They're a pretty
yeah.
conservative couple. So cool. And how, like, before coming on board like 18 months ago, did you ever think about equity like you see it now, like with
No,
property?
no, and I've made mistakes in property
Yeah,
also. So, but
yeah.
yeah,
What do you think, like, when you see these investors that come in and they buy something, they go back a month later? Maybe just walk us through that, how it works, and the
I say go for it.
yeah.
You know,
No financial advice, of
yeah.
course. Like, there's no financial advice here. We're just
It's great that people can do that.
yeah,
I guess it's all about belief
yeah,
and seeing other people do it,
yeah,
and speaking to people every day that are doing it. It's fantastic
yeah.
to be part of it. So
Cool,
yeah.
cool. And is it easy? Is it hard? Is it like not everything's easy in life,
Nothing's easy,
No,
but
everyone will be doing it.
yeah,
Or
exactly right. So,
yeah,
but everyone's situation's different.
yeah,
Circumstances are different.
yeah,
But we do our best to work with you and
yeah.
um, you know, move you forward.
With investors like this, what would be like the sort of steps that you'd see? Like, because, some people might have their house they have, and then they might go and buy an investment property. They might not have a house, and they buy investment properties then to buy their house. Someone that I've seen tonight pop in, like, we can see there's 147 people viewing at the
It's
moment.
growing.
Yeah, it's growing. But I know that there's someone that I was talking to today that, they're in the process of pulling equity out and they're using that to buy their principal place, right? And
Hmm.
it's going to be an inner city sort of property in Brisbane.
Hmm.
Um, that person probably knows that I'm talking about him right now. But you know, I guess you've got everyone at different sort of stages. We've got young kids that are 18, 19. They've got 50K or 30K or whatever.
Hmm.
What would be like some of the characteristics that you've seen that are beneficial to investors? To someone might be watching, going, I could do this, but why why is it not happening to me? I haven't done it yet. They might have fear. Like, what are some of the mental things, I guess, to overcome that you see with people
I
like
think
some?
it's just understanding how a property works,
Yeah,
how it can work for you.
yeah,
Um, in general, just investing, how to invest.
yeah,
Basically, I see it as three phases through investing.
yeah,
You're accumulating
yeah,
with property. You're accumulating the asset.
yeah,
Down the track, when you get to a point,
yeah,
certain level,
yeah,
be it monetary value,
yeah,
you consolidate it,
yeah,
and then you distribute, and you have your income. So
yeah. Cool, cool. Everyone's at a different part of the journey.
yeah,
Right, yeah. Cool. Anything else on that sort of
no,
scenario? Yeah.
no, that's good.
Cool. So I've got here single lady with an income of 50K
Hmm.
that had one property. This lady had one property that was a block of land. Very skeptical. Very,
Hmm.
very skeptical. This person, very humbling sort of chat because I've seen her grow.
Yeah.
There was a story behind something had happened,
Hmm.
and you know, it wasn't a good story before coming on board with us, and she sold the property and had about 300 grand capital, but she's a single person on 50K income. The cash is good, but the income's low. Um, she's up to like how many properties now?
She's buying a seventh.
Seventh. And when did she buy the first one?
Was it October? October? No, December.
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 First property, so spoke to us for like 6 months.
It was a bit before December.
Told her to get her stuff in order.
Yep.
She had a property that was very poorly performing. It was okay, but it had no house. The house had disappeared and all different stuff.
Mm-hmm.
But cashed out, took an underperforming asset, and our goal was to replace her income. So she's on 50K a year. I'm just going to make up some numbers here and add into it. 7 properties with an average rent of say 250 a week, right? Just being conservative, that would be 1,750 a week. $1,750 per week times 52 would be about 80K a year.
It's around 90K, I think.
90K income.
Yeah. With the new property she's buying, it'll be 90. Yeah.
So she's gone from having an underperforming asset, cashed it out, 50K income, wanting to replace the income. She's still on 50K. She's now got 90K income. Her debt level, do I have this here?
1.1.
1.1 million in assets, and the debt is like 800 something. Yeah. So 1.1 worth of asset, debt of 800, 7 properties totaling 1.1 million, 90K worth of income. She's now got double her income. So she's gone from being a 50 grand single income to having 7 extra income streams, spreading that risk. She's got 800 grand worth of debt. Most people got 800 grand worth of debt if they're buying in Mount Druitt in 2022. For those of you not in Sydney, Mount Druitt's the cheapest entry level to Sydney. It's quite rough, got a reputation out there. So 800 grand worth of debt, 90K income. She's got 140 grand income with 800 grand debt. Like, that's a cool position. Like,
yeah. Initially she couldn't service.
She couldn't service,
yeah. Until she sold that parcel of land, and just all.
So I think with her we bought like the first 2 cash.
2 in cash.
The 2 little cheapies cash, pulled the equity.
Yep.
So when you're buying the property, the acquisition of when you're buying the property, how you're buying the property is very crucial. A lot of people think, oh, I'll just buy this property, I'll just buy that property. I always say to everyone, it's not about the property that you're buying, it's about what the bank needs. So it should never be, I want a house, I want a granny flat, I want to buy a duplex, I want to buy a unit block. It's about what does the bank need from me to give me more money.
Yeah.
So some people will be sitting here going, fuck, how do I get my 50 grand a year income to get me to 7 properties in 6 months? It all starts with a conversation. I'm not going to say, hey, everyone call Wayne now, but there is a link in the description. If you do want to have a chat with Wayne, you can have a discovery session with Wayne, which is free, and have a chat. It all starts with a conversation, and it might be a conversation of a year. Some people you got coming on now, you spoke to 2 years ago or 18 months ago.
Yeah, some people I speak to for 6 months before they do anything. So,
I think, a lot of people think buying property is like crypto bros, like everyone's like going to be buying Lambos with crypto and all this sort of stuff. And we're talking about beforehand, what's going to happen with the market. There's a lot of fear and uncertainty and stuff like that. But there's a lot of capital and coming in from other markets, like with these properties, like 150K purchases, rent for $300 a week. Those yields aren't seen in stock markets. They're not seen. The stability takes a lot longer for those markets to get impacted. And we're seeing impacts happening in random sectors, but not, in all sectors. And there's good returns there. So, some people, what I was saying about crypto is it's not just you go and set up an account and you go and put 10 grand and go get some crypto and you're making cash. This might take you 6 months to get your shit together, whether it's mentally getting right and going, okay, I'm ready to do it, or whether it's refinancing or getting your debt structured correctly or selling off an asset or whatever that is. That's cool. Any other notes on that investment?
No, she's very happy. She's very thankful.
I love dealing with our investors. I feel, over the years I've had people that are pain in the asses, and I don't do too much with them. Have a good life. We've got to be selective of who we work with our energy and whatnot. But I love the gratitude, like seeing people grow. They might be coming from a state of fear when coming aboard. I know there was a lot of fear around
Yeah.
that particular investor, and seeing the growth. If she goes to a barbecue this weekend and says, "Oh yeah, I bought my seventh property this week," all her friends and family are probably like, "You're a liar." you know, you didn't buy your seventh. How
Yeah.
could you buy that? But she did, and for the growth that you see with the
Oh yeah.
investors, that's the cool thing.
Yeah,
That
it's really good.
yeah,
Yeah.
cool. So anything else on that or no?
No.
No? Next one, another single lady. Wayne's attracting all the single ladies here, right? I don't know why. I'm seeing single lady here again. Wayne has lots of investors, lots of young people, lots of old people. People actually, people love you so much they actually send you their parents and their kids, and
Yeah, that's
they're saying,
happening.
yeah, it's
Yeah.
happening.
Yeah.
So it's yeah. I was chatting to one of Pat's investors last night, and I was chatting to the parents, and it's that's cool.
Yeah.
So this lady, I remember when she came in, she had she's on 60 grand a year. I think she's got like two kids
Mm-hmm.
from memory. I remember chatting to her, and she had like about 80 or 100 grand to start off with. And she's like, "What can I do?" The bank says, "No, I can't buy anything." And you actually inherited this investor from
Mm.
your colleague that left
Mm-hmm.
a while back. And I remember chatting to her, and she's like, "I can't do much." I go, "No, I can't do much. I want to do something." And I was like, "We just need to boost up your income." So her first property we bought was in 2020. So she got a couple of kids. She had some cash. Bought a first property for 65 grand. I rented for $600 a week.
Mm-hmm.
So it wasn't renting for $600 a week at the time. I think it was maybe renting for like 400, but being able to push up the cash. There is high expenses attached to this property, and I said, "Look, we need to boost your income up to get the banks to like you."
Mm-hmm.
So with that property, bought it cash, 65k, got the cash flow, pushed it up to 30 grand a year. Now she's on 90 grand a year income. She's got the children still, all that sort of stuff. That property just recently got valued at 105,000, which if she was to sell it, it'd probably sell for like 150 in the current market.
Mm-hmm.
But that equity enabled her to go to the second one in 2021. The second property, which was a 50 grand unit, renting for $220 a week. There's recent sales on the block for up to about 85k. So now with those two properties, she's getting like 40k a year income. She's now on, she's got a debt of 60k or something like that. Most people have a 60 grand debt for their car. She's got a property. She's got two properties, 60k debt in 2021, 40 grand a year income. Property's worth 200 grand.
Mm-hmm.
Pretty cool starting from small base. And then this year she was able to go back, pull equity out of both of them because the cash flow is so high, and we're able to get her two more properties. Yeah.
Yeah.
So total properties 377 grand of a purchase price. The value is far greater than that now. So probably like 600 grand, 650k. So it's like a couple of hundred grand worth of net worth.
Mm-hmm.
So the assets have gone up. The rental yields here at 16%. I think it'd be higher
It'd be higher than that
it'd be
now.
like maybe like 25% rental return over the whole portfolio. The debt would be very minimal, maybe like 200 grand worth of debt or something
Mm-hmm.
like that. That's a cool story.
It's really good. Yeah.
What are some of your highlights on that? Like how she's able to,
I think single income.
yeah,
Yeah, don't be afraid
yeah,
to put yourself out there and see what you can do. I myself, I'm looking at financing now, and
yeah.
I'm married, but
Yeah.
Yeah,
He's got all the single ladies, but he has to throw it out there. He's married,
Happily married.
happily married. But he'll help all the single ladies as well. We don't
yeah, of
discriminate.
course.
So.
But yeah, speak to one of the guys at Zinger, I guess, or your broker, whoever
Yeah.
you're dealing with.
Speak with Wayne. Like it all starts with a conversation.
Comes
Like you
through
can
me,
call
yeah.
Zinger. Sometimes Wayne will be able to sit there and say, "Hey, look, I think the best person you might need to speak to a financial planner. You might need to speak to the accountant first. Everybody's position is different. Might be that you need to speak to a lawyer before you get started. So chat with Wayne. on that. But that's a cool story.
Yeah, like I might speak to someone, and we might not be able to help them straight away, but
Yeah,
3 months later, I get a phone call.
yeah,
So people call me on my mobile.
yeah.
Yeah, so
It's
call me direct.
yeah,
It's all good. So,
cool,
yeah.
cool. And your fourth one, tell us a bit about that. I'm going to let you explain all of this fourth one. So
Fourth one. I have to
yeah,
think.
actually, no, I'll read you through it because I actually just realised that I can read this when we're
I
recording.
think they're
Wayne,
online.
hey,
I think
they,
they're
they
online.
are
This.
online. They are online. They are online. So you've got a couple here that started that did in a period of 10 months. Um, 6. I think they might have 7. I don't know. Is it 6 around
Two,
or
three.
there's 6 there?
Yeah,
I remember chatting to
they've done a
these.
couple through their super. The last couple. So.
I actually remember chatting to them the first time, right? I was like having a chat. I remember the discussion about the super and the advice that had happened with the super fund. Not all advice is the same advice that you would get out there. And I heard a few things coming through, and I was like, before you do anything, if you make that step with the super fund, you're in a lot of trouble,
Yeah, they were
right?
going to. Yeah.
So
So,
much trouble because the advisor that they had was going to package them up with off the plan type of properties. I was like, there's certain parameters, and I can't give financial
this
advice.
guy's memory is great. He remembers everything.
I do. You remember the situation as
Yeah.
well. I remember. I always remember where I was talking about my desk beforehand, right? And we're having a few laughs because Wayne's like, I don't sit on this side of the desk normally. I'm like, yeah, well, I know where everything is. It might be an organised mess, but I know exactly where things are. But I remember chatting to them, and they had a super fund. They just set it up as a self-managed, and I was like, please, before you do anything, this is going to cause a lot of grief. There was a salesperson involved. They were trying to sell a property. I'm like, Wayne and I won't give you financial advice. You need to speak to an advisor through super fund. Specifically, we'll give you the guidance and put you in the right direction for everything else. But I was like, calculating just basic calculations. And I'm like, you're meant to have liquidity in there. You're meant to have, a 30% deposit or whatever. And I think that the people were selling like a 90% lend on a
Mm.
off the plan property that probably wouldn't even value up in 2 years' time when it gets built, etc. And they went on to buy 3 properties in a super fund.
Mm-hmm.
I'm just looking here and going back through memory lane here. 325, 365, and 150 in the super, returning about 50k a year in the super fund, um, and in retirement like that will go up, and
Mm-hmm.
they'll do really well out of that. And these properties are paying for themselves. So the principal's being repaid on these things. The one for 150 rents for about $300 a week, so about a 10% yield. That'll help, with 10% yield, pay down the debt and retire the lending.
Mm-hmm.
There's a Sydney property. I think it was maybe even a Parramatta sort of property in the super fund.
Penrith.
Penrith. I think it was a Penrith and a Parramatta.
Was it? Okay.
Yeah, maybe.
Yeah, okay.
I don't know. I can't remember exact where the property's gone. That's the Sydney one. It was like 3. Actually, I know it was a new property. It was a new property in Penrith
Mm.
for 365k, and the owner had previously paid like 450k for it. So someone had bought it off the plan, and we were able to pick it up cheaper than an old unit. That was only 2 years old.
Mm.
So we've got a Sydney property, and then we've got I think a Gold Coast or a
South Brisbane.
Brisbane property, South
Yeah.
Brisbane property.
Mm.
That's probably worth 400 grand, that one
Mm.
now. 325 grand in South Brisbane. So these things here are good, solid assets with good growth, good cash flow. And then the personal name, like we've got 1, 2, 3. I don't know if it's 3 or 4. I feel like there's another
I
one there.
think there's only 3 at the moment.
Okay,
So.
maybe 3. Actually, I sent an email today on something for him. I'd thought of
You
something.
did send one today.
Yeah, for him to pull out equity to go again. So.
I'll call you tomorrow.
So, yeah, with it, um, the what were some of the things that you've been able to see? Like, I guess some investors. Is there anything you have to comment on that couple?
No,
Yeah.
lovely couple.
Yeah.
She's a barrel of laughs. Yeah,
Okay.
really
I
good.
do remember that. Yeah.
Yeah.
She was, yeah.
Crazy woman. No. No, she's good.
So some of the things that like they're quite different sort of positions, you know, like some people using a super fund, some people starting with 60K or 50K worth of income,
Mhm.
some people starting with like 50K worth of capital, 60K worth of capital. Um, do you think that there's anyone that you can't help, or is there people that you can't help? Is there people that
I think it's just a matter of having an initial goal. You
Mhm.
know, I know we've helped people with a lot less than what these people have.
Yeah,
It's just a longer journey.
yeah.
You know. So,
You got one person that started with like 30 grand, and I got them to three properties, and I think that maybe they were on like a betting app or something, and it
uh,
was like, yeah,
yeah.
and that person now has about started with like 20 grand, bought three properties very quickly, and then would now have like 100 grand, 150K ready to
Mhm.
go again to buy the next three or four. And it's like,
Mhm.
starting from like 30K, 20K.
Yeah.
It's good. Is there anything that, let's have a look at the things that hurt people the most that you've seen with working with the portfolio? What are probably some of the problems that people should avoid, like that hurt them?
Um,
I'm putting Wayne on the spot here,
yeah.
like make up questions as we go.
I guess it's just how they're currently living
Yeah.
beyond their means. I guess some
Okay.
people live beyond their means, and
Yeah.
yeah, they just have to tighten their belt a bit. And
What would some of those things be?
that could
You
be
put two
vehicles.
specific.
Yeah, I
Okay.
speak to people nearly
Yeah.
every day. I
Yeah.
bought this $100,000 car which I don't need, and
Yeah.
now I want to get rid of it. So,
Debt, right? 100 grand car loan could be 500, 400 grand worth of property
yeah.
loan that you're missing out on. So um, I have no shame in it. I think I've got my key. I don't know where they are, but they're not the keys. But I've got I'm driving a. I know I've got it in my pocket here. I've got it in my pocket, just so everyone's aware, right? Driving a $500 Mitsubishi Mirage at the moment. Mitsubishi, right? It's a pink thing with all old stickers on it. I get my new car the next few days, so it'll be
Cool.
good. But I've been driving that for like 6 months. I've got no shame in it. I remember once I rocked up to an auction. I didn't sell it for buying a property that, but I have done it before. I rocked up to an auction, and I don't drink that often. I know there's lots of alcohol in the background here. I used to drink sometimes. Went through a phase of drinking with people that I hung around and that, but I don't drink that often. But I remember it was like I had like my first drink where I got like a hangover or something. When I was like 21, and I wasn't drunk, but I went out to an auction, bid on a property, and it was like 130K, 140K, 130K. I won it, and I was like, shit, how am I going to pay for this thing, right? I had a 3 month old um, Subaru WRX at the time, and I just sold it. And I sold the property, the car. I only had it for 3 months, brand new. Bought it cash.
Mhm.
I took the cash, went and paid for the property, and then I think I pulled out like 70K equity straight away within a month. So, whatever it takes, like look and be resourceful, I guess. Yeah.
Mhm.
Um, what are some of the good things that people do? Like sometimes people can be over leveraged or over, you know,
Yes,
what?
I've spoken to one person in the past where, from the age of from when she could work, she
Yeah,
saved all her money.
yeah,
She had like $600,000 in savings.
600,000. Wow.
Yeah, and she hadn't invested it at all. So
Did you ever invest it or not?
no, she never did anything. But it's like crazy.
That's a good and a bad story,
Yeah,
right? Like
it's
someone,
good that she saved it, but she hasn't done anything with
if
it.
she
So
did something 2 years ago, whether she bought cheeseburgers from and Big Macs and froze them, should have more purchasing power
oh
beforehand,
yeah.
and that's where I think you can get to analyst paralysis.
Well,
Like
that money's worth less now than it was 18 months ago, 2 years
exactly,
ago. So,
and it'll be worth less in another 12 months, and
mhm.
eventually it'll be worthless. And I think that a lot of people that comes down to our mindset. Like our mindset and our belief system. Like it's great that people do that. And I think there's that balance. Like I always go. See people that go, "Oh, you got to sacrifice." Like there's been times I ate shit for like 10 years. When I say ate shit, like I didn't literally eat physical, but I'd do whatever it takes. I'd get beaten around by life. Like I worked two full-time jobs, all that sort of stuff, 30, 20 hour days, 7 days a week. And I always said to myself, by the time I got to 30, that's it. Like, it's all just laughs, right? And our viewers probably notice that, like, when I hit about 30, I just don't give a fuck. I just enjoy it, right? I have fun. Life's too short, but you need to have that commitment. And I think the balance is crucial as well. Like, some people will be too to one side. They're like, oh, I got 10 car loans. It's all right. I've
Mm.
got, credit cards to pay the car loans, or, that stuff's too reckless. But you've got people that are too to the other side. It's important to have the balance and go, okay, I've got some capital. I can pull the
Yeah,
trigger, and yeah,
it's just the education,
yeah,
and a lot of people are educating themselves now, and
yeah,
um, like on the internet, there's so much information there. You just
yeah,
need to decipher what you're listening to. So,
yeah.
yeah.
A lot of people will subscribe to, the football, or, the Kardashians, or whatever shit, some rapper or something,
Yeah,
but, taking that time and the energy to apply it to, development and growth. Certainly when I first started, there wasn't there was no one doing a Facebook Live. Facebook wasn't even around.
that
There
was
wasn't even realestate.com. It's like, where's cans? Yeah. Um, Information's there at the fingertips. Um, cool. What do you think about interest rates, right? We're going up, and obviously not asking prediction, a crystal ball of where they're going to go to, but what do you think's happening in the market? Like, some people are scared, some people are happy, like
hmm
educated through it,
I
or
think I think from an investor point of view, it shouldn't be too much of a concern.
yeah,
If depends how highly leveraged you are in the
yeah,
market. As a if you're buying your principal place and
yeah.
you're high strung and high
Yeah.
leveraged with that, then
You're on the hook for the debt.
yeah, you're on the hook. But
Yeah,
as an investor, you got your rental income coming in, and
yeah,
as long as you're buying and sequencing those properties correctly,
yeah.
shouldn't have to worry too much. So,
Have you had any investors call you regarding their portfolio, like that we've built, like these sort of people? Has anyone been too concerned about it?
no,
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 no.
not
Okay,
too much. No.
okay, cool. What about other people that haven't
Yeah,
built
they
this?
haven't come on board.
Yeah,
Yeah, there's always they listen to the media and
yeah,
listen to what's going on, and try if you're listening to the media too often,
yeah,
try switching off for a week or two and see how much better you feel. So,
yeah.
yeah.
It's we saw the last 2 years. And the funny thing is, right, like the last 2 years, we've had all this fear about the illness, right, as we'll call it,
Mm.
and no one
Jabby
trusts
jabby.
no one trusts the medical procedures. No one trusts it, right? Like, it's so blatantly obvious, right? And I wasn't always anti media. I used to be sitting on the TV and put a jacket on. That's why I wore white shirts for like 5 years straight. Is that I'd go on TV and I just need to put a jacket on, and I can be a different person with a different outfit by a different color of the jacket and a different pocket square.
Mhm.
But I look at it and I see that the positioning, the staging, like, I'd be put on to ABC and they'd be trying to come in for a chat. And the next minute they go, "Oh, you're just some greedy investor." And the next time they'll be like, "Oh, let's." They won't let you talk. They have a team. It's like they have a team of people that are there to stage it, and they take people in the frame it and go, "This is what you got to do." And then you walk in and you get, ripped apart.
Mhm.
It's like I was going into, for a Labor Party beat up for like promoting Labor. I'm like, hang on a second, this shit's all staged, right? And I see the lies, I see the media, like, me not being my content being suppressed, and it's only what they want for their box. I'll cut out,
Mhm.
2 hours and put in 10 seconds of a blurb, and realize it was all fake. And then, if I realize what I know is all fake, and we had a joke beforehand about the Earth, right? So we'll say, could the Earth be flat? Could the Earth be round? I'm on the fence. I don't care, right? I don't really. It's not going to change my life, but I haven't seen it, right? I haven't seen it, so I can't comment on it, right? And I don't know. It could be. I believe it's round, right? A lot of people do believe it's round, but that's from the images we're told and all that, and it sounds good and it makes sense. But I ain't seen it, so the people that may seem crazy and go it's flat. It's like, well, there's a chance it could be. I can't comment. So I think to myself, if I know something 100% and it's all being lied, what don't I know
Mhm.
about, right? I ain't a geopolitical person, right? And even the people that do understand that, they only see their bit. Like, you got a political reporter, you got a different type of reporter, they're just commenting on that, but not looking at anything else into the equation. And how can we sit there and go, okay, well, we know that we've just been lied to and locked in our houses for 2 years, we've been forced into taking procedures, been doing whatever,
Mhm.
and now we're going to sit there and go, oh, well, the guy's right, interest rates are going to go up, right? And it's like, you need to go and take that time, effort, and energy to educate yourself. And I think
Well, people look at like the interest rate thing.
yeah,
They hear it on the news, and
yeah,
they don't bother about pursuing what they can borrow. You know,
yeah.
make the call yourself and go and check yourself. So.
I remember at the start of the scare of health scare that we had, um, allegedly, that health scare, people were like, house prices going to drop 40%, right? And people were going, you must sell now, everything's going to crash. And I actually thought the stock market was going to crash. And if you go back through the videos, probably 90% of things were on point. The stock market didn't crash, and that's because these companies were injected with liquidity, right? Like stimulus
Mm-hmm.
packages and cheap credit and cheap bonds and shit like that, which I didn't see, right? And so they've just blown a Ponzi scheme up, and these things have gone up, but everyone was saying this is going to crash, that's going to crash. Property market doubled. And
Mm-hmm.
it's like because what happened is the liquidity that was injected, and markets are getting deflated because it's getting sucked out.
Mm-hmm.
So cool. Um, Any other questions or things that you think should be relevant for success of investors? I'll go through some questions
Okay, that's all good.
and have a look at some of these. But if you have any thoughts,
I guess Nathan does map sessions with new clients and portfolio reviews with existing clients. I guess how do you sort of structure your conversation with them? Having only a few minutes, looking at their brief, and you know, how do you structure the the strategy, and what do you look for in a person's position?
sorry, I've just been flicking through all this. I was like, I thought you were chatting. So you asked me,
Yeah, I asked
what do I think when looking at?
Yeah, so
Yeah,
when you look at someone's position, how do
yeah,
you sort of in your head structure what you can do for them?
yeah. I feel like if I was in the Matrix and I was Neo, I'd see like zeros and ones, right? I'd be like looking for that, and I, I literally, I don't, I could do a map session in 5 minutes flat, right? But when we do them, they're half hour sort of conversations. And it's because I think there's a lot of holes that we need to plug in for the investor, like knowledge, whatever, make sure that we're all on the same page.
Mm-hmm.
But what I need is like when I speak to someone, I always look at, how much cash do they have? I want to know how old they are, right? So we're all just numbers. So if any part of our map form, like those of you that have, that we're working with or have spoken to, you fill out the map form, and I need that data because if I know someone's age, I can simply calculate and go, if someone's 40 years old, they've been probably working for 20 years of their life.
Mm-hmm.
If they were just on 50 grand a year, that means 20 years at 50 grand worth of income. That means that they'd be getting 5 grand a year worth of super.
Mm-hmm.
And in 20 years, they'd have 100 grand in their super. They could potentially do something in their super. Are they self employed? If they're self employed, then I know that there might be some extra issues regarding the financing. So I look at what someone's servicing is, I look at someone's capital, I look at what their expenditure is, to see if we can push down the expenditure, see if we can push up the servicing, and I can sort of look at without, you know, being from the finance team from Zinger, and go, okay, this person should be right to do 10 or 5 or 15 or 20. Sometimes I look at people's positions. Most of the time I'm like, okay, cool, right? And if they've got nothing, like I've got people, most of the people come in, they've got, one property, no property, two properties.
Mm-hmm.
And I'm like, okay, cool, we can get you to 10 in a year, 10 in 2 years, or 20 in 3 years, or whatever. Some people look at it and it's like, this looks more like a suicide note. I'm like, this is your assets, this is your
Mm-hmm.
liabilities, and it's like, it's not good. And I just want to know, like, just real numbers, like, everything else is, external, but from the numbers, it's like I can quickly calculate and go, okay, this person needs equity or this person needs cash flow. If we go back to, you had two single ladies, like they needed to boost their cash flow. One of them had a larger amount of capital. So if we could boost the cash flow, then we've increased the overall income. It's going to keep the bank happy. Then we can go and take that equity back out and structure a normal portfolio.
Mm-hmm.
Um, some people might have, you know, I spoke to someone today. They've got a few hundred grand of your income, but the deposit is a bit lower. So, am I going to look for a property that gives them $20 per week? That's not really what they need. They need to get the equity out. And if we can go buy a property that's going to give them equity, then they can go to the second one, third one, fourth one. And
Mm-hmm.
that person, I said, I think we should be able to get to 5 properties by Christmas with less than $100,000 to start off with. So, um, yeah, I'm always trying to think of what does the bank need for the investor, and I only purchase in line with what's going to get them there. So yeah, keep the questions coming from you, Wayne. It's a good one. Um, Craig, when you say pull out equity, do you mean sell the house or refinance? When I'm pulling out equity, it's purely to yeah, from refinancing the property, not from selling it. Have you ever spoken to anyone, Wayne, and they've said, "I'm happy I sold a property 10 years ago"?
No.
No,
No.
I haven't either. Right? Unless they've bought some complete dog. But generally, people aren't happy that they've sold a property, so we try to avoid selling. We want to accumulate wealth. So if the market was to double tomorrow, would we want to see 500 grand double to a million, or a million double to two, or 5 million double to 10? That's what we want to do is build the asset base up.
Mm-hmm.
Um, um, Peter, I didn't know you had the investor relations team. I can't get a reply email at the moment. We will get onto that. I don't know. It might be your investor relations manager may be away. I think I know who that is. So we'll get on top of that for you, Peter. We answer the good questions and the bad questions in you guys. So, Kurt, I have 300 grand in equity, but the bank says I don't have enough income coming to use that for another investment property. My question is, should I try another bank, or do they all have the same rules? I'm going to leave that with you for answering that one.
I have 300k equity, but the bank say I don't have enough income. Okay.
To the equity, they can't
To service the equity.
Yeah.
To pull it out. Okay. My question is,
should I try another bank, or should I? What would you do?
I'd speak to a broker, not the bank.
Not one bank will get someone the whole distance.
Yeah, that's right. Yeah. So,
gone are the day that you get your Dolomite account when you're a kid and go, I'm going to stay with CBA, or they've got a threshold.
I was speaking with someone today. He works for a bank.
Yeah.
And I said, it's great that you work for the bank. You get your 90% LVR and everything looks good, but you don't want to stay committed to them because they might tie you into them down the track. So he's speaking with a broker tomorrow, I think.
Yeah. So if you work at a bank, you get a 90% where you don't have to pay mortgage insurance. So it's a little inside bank thing. As for if you're a doctor, a lawyer, an actor, or a sports star, you get 90% no mortgage insurance as well. So if it was me, I'd be looking at multiple banks. So Kurt, if you're not in contact with someone, speak to Wayne, send a little message to wherever it sits on your screen. I see a different screen than what everyone else does. Flick a message over and get onto a call with Wayne and see what you can do. Robbie, Nathan and Wayne, how do you see the property prices in Harvey Bay and Bundaberg? Will they go up well? Will they go down? Will they stay steady? And are they a good investment for investors that can't afford in Sydney? Depends. Like, I know Harvey Bay relatively well. Bought a bit of stuff in Harvey Bay. If we were to go back a year ago, it was like there's some severe, great buys in Harvey Bay, but the market has been quite hot. Those bargains aren't really there like they used to be. But I don't stick to areas. Like, I buy, without giving away locations, would there be a geographical region I'd go to, or would you just go, there's a towel and we'll just drape it over Australia and buy anywhere inside of that?
No, it's a geographical region. So.
No, but do we buy just in Harvey Bay, or do we go?
Oh, no.
It's everywhere.
It's everywhere, yeah.
It's every corner. Look at these things.
No, but it changes. Like 3 or 4 years ago, you were buying a lot on the Gold Coast.
Yeah.
The market's quite hot there now, and it's hard to find good value. So.
The Gold Coast was good because the Gold Coast was on sale. Mount Druitt was good when Mount Druitt was on sale, and the strategies that I see work for different types of strategies and different price ranges. And I think it's important to be very fluid with where you go. Some of my biggest mistakes that I'd have in investing would be, having an opinion or a fear that would cost me money. So being open and fluid to move with markets. Always said the Gold Coast and Brisbane would be the first market to take off. I actually think I did a Sunday night interview in the helicopter over the Gold Coast, and I said Sydney's the New York of Australia, and the Gold Coast is the
Miami.
Miami, right? And that was very undervalued at the time. And I said that would see it take off. I'm not buying there. Like I might buy, you know, 1 out of 50 or 2 out of 50 in that region, but I'm in other markets where things are on sale. So, just because everywhere's gone up in value doesn't mean that, those specific, that there's not other areas that haven't gone up in value. So, yeah. Since being here, Wayne, like in the business, have you like looked at areas you're like, where the fuck is this? Right?
Yes.
Yeah. You're like, wow, I just learned something. Do you learn something on a
Yeah,
weekly
like
basis?
you'll present a
With
property
yeah,
to a client, and I have to look it up.
yeah,
Where's that? So,
yeah.
but, yeah.
And it's wherever the deal goes, wherever the money is. If I haven't said this for years actually. Like people go, should I buy a house? Should I buy a unit? Should I do this? Should I do that? I always revert back to the simple thing, right? If I said I've got 50 grand right now, I actually said this to Daniel years ago, my ex business partner. I said to him about a property. I said, go buy the thing. And he was like half asleep. And he was like, I'm not driving to Campbelltown to sign a contract. I'm like, just open your fucking car. You're going to make 80 grand to sign the thing. He goes, oh, now you put it that way. I'll hop in my car. I'm like, fucking get in your car, go, right? And that was before DocuSign, before, the way that we
Email.
do business. Yeah, like before we do it now.
Yeah.
And always said to people after that day, I was like, if I said to you, I've got 100 grand or 50 grand, let's say you've got 50 grand, right? Come pick it up from my office. People would be like, they'll get here and they go, I don't want 5 cent pieces. I want fucking $100 notes. It's like, it's still 50 grand, put it in the bank, however it works, however it folds. So a lot of people will get caught up in it has to be this. And it's like, who gives a shit? You want the result. You don't want the property's just a vehicle to
That's the
get
numbers.
you there.
Yeah,
Yeah. And I think, would that be one of the things that you see? Yeah.
for sure.
Andy, wife bought one for 165 in 2019, revalued for 400, pulled out equity at 80 grand. Now we have no money into the deal, plus extra, still positive cash flow. Always go for the cash flow. Exactly. You need a good balance of cash flow and equity and working out where you're at to do the next one. So that's a great sort of result there, Andy. Good work. Hey, Craig, in most, we're talking about refinancing. Pat's in here from the office. He's trying to,
He's trying to steal.
steal everyone that's talking to you. They want to see Wayne. Pat's jumping in. Good work, Pat. Right? The team is constantly here, right?
They
The
are.
team is constantly here. I can see Carolyn.
I don't know if Gemma's on. She's probably asleep.
Gemma's in the UK. She's got home for the moment, so she's on holiday. So she might be. I was chatting on Instagram before. Andy, go to a broker. We have access to a number of lenders. Yep. Leave a like for a handsome fellow Wayne for making it alive. Just remembering he said all the ladies out there, all the single ladies, he is happily married. So it's usually debt to income. Pat's already on to Peter. So
I always say to clients too, like, you might buy, want to buy 10, 15, or have a goal to get to X amount of properties. Not all the properties are going to be, I guess, some of those properties are used as a vehicle to get you to the next one. And like you always say, you're using this property to get you to your third, fourth, fifth property.
Yeah.
So, but at the end of the day, you've got a portfolio. You might have one or two shitters in there, but they helped you get a loan for the
something
next
else.
one. Yeah, something else.
So if we're going for the travel, I always say, how do you get to Perth? Depends where you're starting from. Like, you might have to hop in that smelly cab and go to the airport. It's like, I don't want to hop in a cab. As well, we don't get the airport. You can't get to the other side. So, we were talking about it recently as well, Wayne. Like, I said, I'm getting my dream house and picking up the keys for it tomorrow. For me to do that, I never like selling. I don't want to sell, but I was just sitting there going, I work so hard, I push myself, I've got to enjoy it, whatever. And I was like, if I have to pull the band-aid off to make something happen, I just sit there and be like, sell off 3 of these or 2 of these or 5 of these. I found a penthouse, right? I found a penthouse. I've never been into it. I've filmed it outside of it before, and I bought it for 300,000. It's going on the market tomorrow or someday. It might even be on the market now. For 1.2, offers over 1.2, 270-degree views, overlooking the ocean, Sunshine Coast, really cool location. But that thing's gone up $1 million. It
Mm-hmm.
was just a bulk deal I did with my investors years ago. Half our investors bought in there at the time, and not half of them, it was like 25 deals or something. But everyone bought in there, and this property going to make $1 million. I'm like, that got me. I've never been to it. I won't notice it here or not, but I'm going to live in a mad brand new
No,
house.
it's
It's
going to help you
awesome.
buy this one, yeah.
It's a part of the process.
Mm-hmm.
So yeah. Um, check your messenger. Koshi's a tool. I remember when you already showed the jealous prick. Well, the funny thing is that he's senior up people in the business are and were my clients, and they sort of retired as well. Like he's
Mm-hmm.
doing really great. So I always remained my professional integrity of not axing him on the show. I could have like KO'd him live, right? But it's I let him die and he saw it. I'll leave that one there. Uh, Birch, mate, you are the Grant Cardone of Australia. 3 questions. Grant Cardone sounds really great on Instagram and shit like that. You watch his stuff and
Where's
you
your
get G'd
plane?
up. No plane, right?
No plane
But
yet.
a lot of that stuff, I look at it. I remember Grant Cardone. There was this thing called um, Periscope. Right? I'm showing my age now. Periscope. It was an app and it was a live streaming app, and Facebook bought Periscope and made Facebook Live
That's
out of
right,
that.
yeah.
Yeah.
Mm.
And this guy, Grant Cardone, he was on this Periscope every day. My mate showed me this guy, and he's like, look, he's doing cool stuff. And he's selling car sales videos, right? He had nothing to do with the property, but out of all of a sudden, the last 5 years, he's, killing in the property. And good luck to him. Like, I don't know the bloke at all, but always remember he had nothing to do with property 5 years ago. So, yeah, with it, yeah, it's, yeah, interesting. When do you think property prices would crash? Property prices would crash is A, everybody dies. B, because then your supply and demand will screw up. B, when they take all the money out of the system, or they cause a massive deflation. They're trying to do it at the moment, but it won't work because we've already seen at the start. I don't know if you've been watching this the whole time, but at the start of the video, I was talking about why they can't push rates up any higher because it's stuck. Um, and Third one is, what do you think will happen to our investment properties when the Great Reset comes around? Um, so, for those of you that don't know what the Great Reset is, it's a paper, like a white paper from the World Economic Forum. These guys have agendas and they come out and they say, by 2030, this will happen and that'll happen and emissions and all that. And they're all the bodgy things that they try and push through the propaganda on the TV and that. And one of the things is that you'll own nothing, be happy, and all this. I think that they're saying, a lot of people are taking it metaphorically, like you'll own nothing, everything will be taken from you. Someone's got to own everything, right? If that's the case. So you just want to be the person with the power and the control to own the things. I actually feel that people will become, if you go back and look through hyperinflations and different sort of crashes throughout history, hyperinflation will cause a lot of, you know, it'll make rich people poor people rich. It's like most people will just end up on the poverty line, but there's a few that become very rich out of that. And I look at the successful things that have happened throughout these times, and I see that a great reset is. It sounds exciting. I've never been through it. Let's put it all on black and see how we go. But looking at the world we're going into, um, I think a lot of people will be running for the door when they're going to get trampled on. So um, I'm excited by it. I see the opportunities. Own assets. That's the biggest thing. Own assets. Assets that produce cash flow. And I've always talked about having food and water and shelter and gas. Add that to the equation. Have electricity sources. Have vehicles that people laugh, like I've got cars that don't have any computers in them. They're like really old shit boxes, but it's like those things, they can't be tracked, they can't be traced, and all that sort of stuff. So having ability to move and live life on your terms is very, very important. My slogan is live life on your terms. make sure you're setting yourself up accordingly to go through any sort of depression or recession or a boom time. Most people will make themselves so weak because they're trying to stack against a boom, but you should be really working out your worst case position and investing based upon that. And that's why having the strategies of below market value, upside for growth, and strong cash flow, and then having below rebuild cost, and in areas which will see growth because of cash flow, of debt to income ratio. Those sort of principles will get you through any sort of recession. Robbie, what companies in the stock exchange do you think are hot water? In what areas? For example, tech companies are in trouble, and Bitcoin, gold. I wouldn't like to speculate on that. I am not invested in any paper assets at the moment. We will see more liquidity crises. These zombie companies will blow up. We've seen Revlon go and some other companies go. As for Bitcoin, it's not a company that just has lack of liquidity in it at the moment. So that's why it's falling. Gold, it's manipulated. Everything's really manipulated. Gold's cool, but does it bring cash flow? I like it. You can't go bankrupt with gold. You can't go bankrupt with Bitcoin. You can't go.
Gold's a safe haven.
It's a safe haven, yeah. But a piece of gold is still a piece of gold. So I think, in 1,000 years' time, if we have an ounce of gold, well, then it'll still be the same ounce of gold, but you've preserved your wealth, taking it through that reset. So I think, these things should be looked at as vehicles, just as I talk about what type of property in the property space. Each different asset class has its time and its vehicle to get you to a different part of your journey. Craig, I have a self-managed super fund worth around 550, a loan against 200. Should I buy another SMS property with equity? I don't actually believe you can pull out equity. You can't pull equity from your super fund. So you might have to sell it. The importance of buying the right assets at the right time to get the maximum out of your super fund. Otherwise, you might be forced to sell it. If you'd like, Craig, reach out to Wayne. He can put you in contact with the right people to look at what options there are with that to sell or to keep it or whatever, because there is transactional costs that are involved as well. You want to make sure that you are getting the best out of your super fund. And most financial planners will try and sell you products and shit, so just be careful of that. Ryan, you talk about the government printing money and how it'll affect the value of properties and rental incomes. What are your future projections? Well, a lot of the future projections are coming true at the moment, but we're looking at rents rising, we're looking at inflation everywhere, we're looking at, I did say if you do go back a year ago, 2 years ago, and especially 5 years ago, that we would see one crash get covered over with cheap available credit. And then once we see that period, we'll see them try and control it because it'll have runaway inflation, which is what we're seeing at the moment. And it's this period that we're in at the moment is where they're trying to push up rates. I thought the maximum they could do was 0.25% increases before we see the thing blow up. We're seeing things blow up now because they've tried to tighten it too tight. I think that this is a very short period, and then we will see more money printing to stop everything from crumbling, and then that will be the linchpin for the hyperinflation. I did a video in March 2020 on the whiteboard in the other room talking about hyperinflation. Everyone can Google it on YouTube. Nathan Birch talking about hyperinflation. It's me with a whiteboard in front of it. And I talked about that this is not the hyperinflation. Like, we will not see the hyperinflation. We'll see the hyperinflation in 3 or 4 years, and we're right on track for that. What levers they pull, I don't know what levers they're going to pull next. But I do believe if we fast forward in 2 years' time, 3 years' time, 5 years' time, 10 years' time, there'll be a lot of people that will be squeezed in markets, take the wrong exits, take the wrong turns, and a lot of people go, shit, I wish I didn't sell my property. I wish I didn't, do this. I wish I didn't do that. And I think there'll be a point where people will be too over leveraged or people that will be too under leveraged. On that note, I'm seeing that we've gone over the hour. We're going to wrap things up very shortly. We've got 2 last questions. Robbie said, thanks for Wayne and Nathan for answering all the questions, and also thank you again for doing these community events. Appreciate the feedback. Thanks, Robbie. Thanks, Wayne, for coming in today. You could have been at home with your happily marriage, and but you spent it here.
No, actually, we got the wife's out.
Is she out? Okay.
Yeah, and the kids are at home by themselves.
Okay, cool. Hopefully they haven't.
5 and 6 year olds.
Really? Okay,
no. Let them run.
So yeah, with it, appreciate you guys watching and wanting to ask us questions and having confidence in what we do. Josh, do second tier lenders ever do desktop valuations, or are they always full val? I think 99% of the time they are full valuations because they have a different lending position. And I think it's important to stack your lending. It's not just the properties that you get right. Wayne is here today talking about his investors doing great things with small capital or different things. What I think is very crucial is the back end of how the finance works. If these people didn't have access to equity, if they didn't have access to the loans, they wouldn't have those portfolios.
That's right.
Yeah. And cool. On that note, guys, any other comments, questions?
No, keep doing what you're doing.
Thanks, Wayne. Keep doing what you're doing. Keep being awesome. Keep helping everyone. And we'll catch up soon, guys. If you do have any desired questions, you do want to have a chat with Wayne, it all starts with conversation. Have a chat. Reach out. There's a free discovery session link somewhere in this conversation this evening. Keep being awesome, everyone. Bye for now.
Thanks, guys.
Thanks, Wayne.
Thanks, mate.